Okay, last time we left off was yesterday, the 18th. I was anticipating the market to go higher. Here's a look at the daily chart. And indeed, it looks like the market's trying to fill this gap, but it didn't quite do it today. We're about half a minute left in the trading session. So it does appear to be an up day, which means the bull call spread I put on yesterday, expiring today, pretty much at the money, is now worth $5. So I made $2.52. And the market closed at $519.17. In terms of tomorrow, it's still looking pretty bullish. The market is above the 9 EMA, bounced off the 21 EMA for the third day in a row to finish off above the 9 EMA now. So it tried to fill this gap over here from last week. It did not go all the way, but even though it finished lower than its highest point of the day, we're still above the previous 2 days. So that is bullish, and I will be buying another call spread for November 20th. I will buy the 59.25 and sell the 59.30. This one is more out of the money because an at the money call spread today
Order filled.
would be too expensive. So this one filled at 240. One of the things I want to try this month is to not overpay. So I want to try to keep it between the 240 to 260 range. If I went one strike lower, like 20.25, you can see the market price is going to be around 270. So that would be a bigger loss if the market doesn't go up. But if we do get a higher market tomorrow, very likely it's going to fill this gap. It doesn't mean it'll close above this gap, but even if it closes somewhere in between, it should still be higher than 59.30. So that is the option spread right there. We'll see how this goes tomorrow on Wednesday. All right, now we have Wednesday. Markets just closed and the SPX closed basically the same as yesterday, even though it did go down quite a bit today. But because it didn't go above 59.25, it means my bull call from yesterday is now worth 0 and I lost 243. In terms of tomorrow, I'm still bullish. So why don't I try the same thing again? Buy the 59.25.
Order filled.
And that filled at 245. So far in aftermarket, it looks like the market is going up, but we'll have to see what happens tomorrow. Okay, today just ended and the market is higher, which is good for my bull call spread. I put this one in yesterday, it expired today, which turned into a $252 profit. For tomorrow, last day of the week,
Order filled.
I like to go bullish again. So I just did a 59.55, 59.60 bull call, and that's this one right here. To make the full amount on that, the market would have to go up by just 0.1%. I think that is likely because the price did fill the gap today as expected, and it even went as high as 59.63 before pulling back. So there's a good chance tomorrow it'll go back in that range. But let's see what happens tomorrow.
Order filled.
Okay, last day of the week, the market closed higher, and I just put in another trade expiring on Monday, November 25th, which is also higher because I think this bullish trend should continue going into next week. The price is above all of the moving average lines, and for the last few days, the market was making higher lows. So today's low was higher than yesterday's low, which is higher than Wednesday's low, which is higher than Tuesday's low. So there's a good chance on Monday, if this trend continues, we're going to see a higher low, which will set up the price to go higher than today's close at 59.70. So looking at my options, this is the one I put in yesterday, expired right now, and I made 247. And this is a new trade I just put in expiring on Monday. And this one's a bit more expensive at 263. That's how much I paid. So the most I can make from this is 237. Today was pretty close. I wasn't sure if the SPX would close above 59.60, which is where I would make the maximum profit. If I go over to the 5-minute chart, 59.60 is around here. So especially near the end of the day, the market kind of dropped below that, but ultimately did finish higher. So that's good. So when you get a green candle in the market today, like this, with a larger wick on the top, and a VIX candle that is red with a larger wick on the top, about 70% of the time, the next day is a positive day. So that's why I decided to go bullish. And we'll have to see what happens next week. And today is Monday the 25th. So it's the final week In terms of my most recent trade, the 59.70.75 bull call is now worth full value at $5, so I made 237. From that, because I anticipated the market would go up today, and although it's a red candle, it still closed higher than the previous close on Friday. In terms of tomorrow, most likely another positive day just because the market's on this bullish channel and it's just more likely for it to continue going up. So for tomorrow's trade, I might choose a 59.85, 59.90 call option. This will be at the money expiring tomorrow, and it looks kind of expensive, so I'm gonna go one strike higher, see if that fills at around 235.
Order filled.
And that filled at 250. Okay, so here's that option spread, and very likely I'll either make 250 or lose 250. Okay, today is Tuesday, the market's just closed, and it was another up day. So the 59.90.95 bull call is now with $5, and that's a profit of 247. In terms of tomorrow, still likely an up day, because like I mentioned yesterday, the price action in a bull channel is likely to continue following that channel. So for November 27th, I'm going to choose the 60.20 call option, and I will buy that and sell the 60.25. And that seems a little bit expensive at 270, so I will choose one strike higher. The market has been to 60.30 before, so it'll likely try to retest that level. Looking on the daily chart, the S&P 500 just finished at an all-time high for the day, so we could get a bit of a pullback soon, but you can see it'll most likely want to continue going up to hit at least 61.20 before some kind of reversal.
Order filled.
Okay, so that filled at 245, and that's going to be this one right here. So we'll see how things go tomorrow. And it's now Wednesday, the market's just closed, and the SPX went lower instead of higher. So my option from yesterday is now worth nothing, and I lost 248. And it looks like for the next day, it'll be going lower. So for November 29th, which is a Friday, and we're going to skip tomorrow, Thursday, because it's Thanksgiving and the markets are closed, I will be buying a put spread around 6,000, and I will sell the 59.95. That's a little too cheap, so I'm going to go a strike higher to 605 and 6,000. Okay, this seems more reasonable.
Order filled.
Okay, so that filled at 250, expiring on the last day of the week, which incidentally is also the last trading day of the month. And it looks like it was an up day. So my option expired worthless, losing $253. But in the end, this is my total profit for this month, 1212, much better than October's results. This time I made about 3 times as much. So those couple of changes that I made, I think really helped. One is keeping the cost around 250 so that when I do lose money like these last couple of days, I'm not losing like $270 or $280. And then the other thing is making the trades pretty much right at market close, so the price is not skewed by aftermarket movements. Overall, 12 days of wins and 7 days of losses. This works out to be about 63% win rate, which is pretty close to what my backtest shows, leading to a much better result for November. So that's it for now. I'll keep this up in December and see if I can continue this streak. Thanks a lot for watching, and until next time.